All right. Well, welcome everybody. This is going to be fun. This is the first time we're going to open this up to the public and invite the public into a team training like this. You know, we do a lot of team training stuff, and you know, recently I realized that one of the things that we've been failing at, if you will, as a company is just teaching the team how to invest in real estate and do the very thing that is our mission, which is make real estate investing simple and accessible to everyone. So we got the idea to take our Friday mornings, which are our team training mornings and our team meeting mornings, and slide in a specific real estate investor training. And then in alignment with our mission, we decided to open this up to the public. So it's pretty cool that we're doing that, and I'm pretty excited about it. So what I want to do is kick this off and just kind of tell everybody that our goal is to help you understand how to invest in real estate. And let me tell you what I've learned in the years of investing in real estate. If you tackle it with baby steps and bite-sized pieces, you can reach your goal. When you create this massive thing that you're trying to tackle from day one, it becomes more complicated, more out of reach, and more frustrating than if you just say, hey, I want to go get my first $1,000 a month in passive income. That's the mindset I want you to think. Not because I'm not a huge goals guy. I'm a visionary and a big goals guy. But you can get the big goal if you stack little wins on top of little wins. Little wins on top of little wins. And then as you get to the point where the little wins start to stack up, those little wins become bigger. And then you're stacking medium-sized wins. And then you're stacking big wins on top of big wins. And that's how you build momentum. So the way I thought that I would do this is I want to kick us off with that. I want to give people that insight into how I'm thinking about teaching everybody to invest in real estate. And I want to introduce Mike, who is sitting right here to my left on your screen. He might be to the right. And he's got the Killer Freedom Soft hat on. Mike's our head coach, and he's going to help me moderate this because Mike's been around me. His office has been 10 feet from my office for the last 13, 14 years almost. Yeah, long time. Yeah. A long time. And so as we get into the Q&A session portion of this, Mike will help moderate that. So as we get into the discussion and the teaching component, the team here knows how we ask our questions, and then Mike will moderate them in. And for all of you guys out there in the live stream world that are invited to join us today, you guys can ask your questions as well. I believe it's on YouTube. If you're watching on YouTube, is it Facebook as well? Yeah. YouTube or Facebook, you can ask a question, post a comment, and we'll moderate that in and we'll answer your question. So that's the way we're going to tackle this. Now, I do want to give you guys one other thing, and that is you can go to freedomsoft.com/napkin. freedomsoft.com/napkin. And there's about a 35-minute video that you can watch on that page that teaches you the difference between short-term and long-term real estate investing. We're going to talk a little bit about that today. It dives deep into the numbers and how you would analyze a real estate deal. Because one of the biggest things that I think most newer investors struggle with is how to run the numbers and what do the numbers mean. And so on that video, I break out all of the numbers of a typical short-term fix and flip type deal, or a short-term buy and hold type deal, or a long-term buy and hold type deal, and then show you how the numbers get down to your maximum allowable offer. And that's the key. That's the key to this whole thing, is understanding what the maximum allowable offer, the MAO, that you can pay for any real property is. And this applies to single family houses, it applies to apartment buildings, it applies to commercial real estate. There's a maximum allowable offer that is going to produce short-term the profit you want, or long-term the cash flow you want. Does that make sense? That's what we're looking for. So it's understanding that. So go to freedomsoft.com/napkin and you will get that video. Now on that page, there's also a downloadable worksheet that will walk you through filling out the numbers and doing deal analysis. So if you're trying to figure out how to get to that place of doing deal analysis, go there, that will help you. With that being said, I want to jump in and tackle this. We're gonna start with the understanding that real estate investing is either a short-term profit game or it's a long-term cash flow game. You're trying to do one of those two things. Now, real estate wholesalers and real estate agents, two different people, two different things, play a role in the real estate investing world. And that is a real estate agent typically plays in the retail side of the world, homeowners looking to live in houses. Real estate wholesalers typically play the role in the distressed side of the world, right? And the distressed side of the world is typically non-bankable houses or houses that need quick sales, houses that are in either property or personal owner distress. And wholesalers fill that gap. A wholesaler's job is to understand how an investor thinks about doing the deal so that they understand the math and can bring a deal to the market for the investor that's ultimately going to either fix and flip or buy and hold. If a wholesaler doesn't understand the investor's math, the wholesaler doesn't bring the deal to the table correctly. Okay, so we as investors can choose to be active in the business, deal finders like a wholesaler. We can choose to be active as a fix and flip investor, short-term profit. We can choose to be long-term buy and hold passive investors looking for the long game. And you want to choose what one or all of those things you want to be as it pertains to being a real estate investor. So let's dive into this and let's talk about what is a deal? Because as I've asked the team, how do we invest in real estate and how do we get into this game? One of the questions that comes up is risk. How do I know a deal's a deal? How do I not get out on the long end of a limb and snap off, right? So risk is a big piece of becoming a successful real estate investor, and managing risk is what investing is all about. It's managing risk. It's looking for upside while managing risk. Those two things, that's what being an investor is. So when you ask yourself, how do I manage risk? You have to ask yourself, how do you want your money to perform? Okay, so you have a certain amount of money, and it could be a lot or it could be $1. And I don't care the answer. I don't care if you have $1 million or if you have $1, you can invest in real estate. And you can do it quickly, right out of the gates, and you can do it profitably. So you don't need a bunch of money to get started. What you need is the knowledge, and that's what we're talking about here. So number one, we want to talk about risk. I think, and I've fixed and flipped hundreds of houses. One of the riskiest things you can do in real estate investing is fix and flip houses. It can be very profitable as well, but it's also very risky. And that is because you have a short-term timeline and horizon to buy at a discount. Have you guys ever heard the phrase, you make your money when you buy? Mm-hmm. You guys heard that, right? So the phrase, you make your money when you buy, is all about buying at a discount so that you can execute on either the short-term profit, typically a 3-month to 6-month turn, or a long-term cash flow. But you make your money when you buy. The steeper discount you get when you buy, the better off you are, the more risk you've taken out of the scenario, okay? I know a lot of fix and flip investors who became accidental landlords because they paid too much, didn't estimate their after repaired value properly, couldn't sell it for the profit that they were looking for, their costs stacked up, and pretty soon they were kind of upside down and they had to hold it long term and wait for the market to help them out. Okay, so fix and flip is all about buying cheap. In the market that we have today, fix and flip is a tough business because you put it on the market and almost every city across the country is getting bid up over asking price, very little inventory, very easy and low cost financing, and prices are going up. So the fix and flip business model is a tough one in this market today. I want you guys to understand that there's two things to think about. You can own real estate or you can control real estate. And those are two distinctively different things. So think about it. If you buy real estate, you take title to it, right? And you now own it and you can do whatever you want with it. You bought it at a discount as an investor. You typically repair it or fix it up in some way, and then you can execute on some exit strategy. The other side of that is you can control real estate, and you can control ownership or the option to own the real estate. You can control the cash flow. You can control the use of the property. So I want you guys to think about it. How much risk is there in controlling real estate? Not a lot of risk, right? Because if the market tanks, you can not renew your lease, or you can not renew. So controlling real estate is what's called a lease with an option, or let's specifically call it a master lease. You go in and you control all the rights to that real estate. See that hotel right over there? That hotel is likely on a master lease. There's a real estate investor that owns the land in the building, and the hotel chain came in and likely did a master lease over that facility to lease the space, giving them the right to sublease. Okay. They also have the right to renew those leases. Typically they're longer periods of time with rights to renew at some escalator. So if you think about it, if you're trying to get cash flow, you can approach this in a couple ways. You can go buy real estate at a discount, or you can go control real estate that gives you instant cash flow with a master lease. Now this works for single family houses. It works for duplexes, triplexes, fourplexes. It works for small apartment buildings. It works for mid-size apartment buildings. It works for large apartment buildings. It works on any scale of real estate that you might want. So the first thing I want you guys to understand is that you can own it or control it. So we're going to use a framework for these various trainings of the BRRRR method. Okay, buy it. And BRRRR is just kind of an industry thing that's been around for years, but you're going to buy it at a discount. You're going to repair it to improve its value. You're going to rent it. You're going to refinance it, and you're going to repeat. So BRRRR, BRRRR. Okay. So the first thing we have to do is talk about buying it. Now with BRRRR, with the BRRRR method, because we're using a refinance component, we wouldn't use a master lease in that scenario. Okay. I want you guys to think about acquisition strategies. So one acquisition strategy is you're going to buy and you're going to take title. So that means you got to have some source of capital, right? You got to have some source of capital to acquire real estate at a discount. The other side is if you're going to control real estate, do you need any capital to control real estate? No, you need to negotiate a master lease, right? and you can control a property and create an arbitrage of cash flow quickly. Is that making sense to everybody? Okay, so we're going to use the framework over the next several weeks as we do these live trainings, and we're going to talk about the BRRRR method when you acquire properties, and we're going to talk about cash flow arbitrage if you control properties. In the market that we have today, there are property owners who, despite how good the market is, are frustrated and want out. Either the property is distressed, they don't have the cash to fix it up, or the tenants just trashed it and they're done dealing with it. And you can buy property still today at a discount. Or let's say some of the similar things have happened on a small apartment building or a mid-sized apartment building. An owner has been getting cash flow. Maybe there's been a death in the family, and now the spouse hasn't actively been involved in managing the property, but now they're required to be involved. That creates motivation to not deal with it. And a master lease is an opportunity for someone to no longer deal with it, maintain their cash flow, while you step in and create a cash flow arbitrage and start making profit by operating that building, that piece of real estate, that facility. Okay, so what I want you guys to get is, and the math is going to make more sense when you go watch that video at freedomsoft.com/napkin. I don't want to get into all of the math right now, because just in a discussion like this, if I start talking numbers, everybody's head's going to spin. It's all there. It's on a video. It's on a screen. It lays it out line by line. Go watch that, because I do want you to understand how to run the numbers. Okay. The big thing today is I want you to understand that there's more ways to do real estate investing than cash at a discount. Okay, cash at a discount is one fantastic way. It's ownership. Control is another fantastic way to do this. So before I dive into kind of the next segment, let me do this. Let me open up for some questions. What questions do you guys have about that? The first piece here is just to get you to understand the difference between ownership and control. What questions do we have, Mike?
So nothing really about control at this point in time.
Okay.
We've got some, we're kind of bouncing around a little bit of topics, so I feel like those maybe fit a little bit better towards the end. Let me see here. Somebody just said, can you post the link with the napkin, SG? And I think you just said it again. freedomsoft.com/napkin.
Yep.
So Henry, wholesaling falls under which of what? What do you mean, which of those?
So you got control, you have ownership. Louder. You have control or ownership. We're talking about, I want to do wholesaling to start off.
Yep.
Which is that falling under?
Yep. So let me give some thoughts. I don't know that you should do wholesaling to start off. I think wholesaling is a great business, but it's very transactional. It's work. You gotta work to go wholesale, and then you get your payday, and then you got to go work again. What I would say is, with ownership, what I would do is I would go focus on getting private capital or having your own capital. And private capital, so think about the sources of capital. There's traditional banks everybody knows about, going down to Wells Fargo, Chase, calling your mortgage lender, getting approved for a loan, and acquiring real estate. Everybody knows that. That's slow, it's cumbersome, it requires personal guarantees, it requires credit checks, it requires asset verifications, it requires down payments. It's not what real estate investors do, okay? Then you have hard money, which is typically, hard money are asset-based lenders. Asset-based lenders care about the real estate, they care less about you as the borrower, okay? So if you go acquire at a discount, a hard money lender is going to lend some dollar amount to the value of that real estate. They don't care about your credit score. They don't care about how much cash you have in the bank. Different hard money lenders have different criteria. Now, they're more expensive. You're gonna pay points 1 point is 1% of the loan amount, and you're going to pay a higher interest rate. But hard money lenders fit that gap of where a traditional lender will not lend on the real estate because it's distressed or it doesn't fit their model, or you don't have quite the everything you want or need to meet their lending criteria. The other thing is, as you do, 3, 5, 7, 10 real estate deals, pretty soon the traditional banks cut you off even if you do have the qualifications. They just won't lend to you anymore. So hard money lenders fill this gap of they're looking at the asset less than they're looking at you. And while they're more expensive, they're in the business of lending, okay? Private money is relationship based. I do all of my real estate deals that are ownership with private money. I don't use traditional banks for anything. I do private money. Private money is, let's say, Henry, you've got $100,000 that you don't know what to do with. You don't want it in the stock market right now, even though it's been performing okay. You're not quite sure about putting it into cryptocurrency. You're not really sure about sitting it in cash under the mattress and letting the dollar devalue. So you want to do something, you want to put it to work. Real estate is a fantastic hedge against inflation and against everything that's going on in our economy today. So you take that $100,000 and say, hey, Rob, I'll fund your real estate deals and pay me a certain amount of money every single month. It's relationship based. We know, like, and trust each other. And so you'll give me that $100,000 to go acquire real estate, buy it. You're going to give me the money to buy it. You're going to give me the money to fix it. And you're going to give me the money to hold it through that fixed time until it gets leased up. And the terms are whatever we negotiate. We'll do a whole session coming up on private money and the way to structure it, the way to find it, the way to get it, the way, how much you should pay, all of that. But one of the benefits of using private money is not only can you get the money to acquire, you can get all of the money to renovate, but you can also put a couple nickels in your pocket. So when you talked about wholesaling, should I wholesale today? You can make as much money by paying yourself that wholesale or acquisitions fee. And I've never worked with a private lender that has a problem me doing it, because we work hard to find the deals, right? We use FreedomSoft. We do, use Lead Finder. We do all of the things inside of FreedomSoft to go find those opportunities. And when we find those opportunities, now we need the capital to close. And the capital to close is from a private lender. And those are relationship based. So I would argue, instead of just wholesaling, which I did for a lot of years, but, and I wasn't in an office like this when I got started, where you could go find a deal, have it under contract, have some private money potentially lined up, and walk into my office and say, hey, is this a decent deal or not? Wholesaling teaches you what good deals are, but it's also work. So I love the idea of start building towards your cash flow today.
I've got a couple things in here for you. 2 people have asked, how do you find private lenders? It sounded like, maybe you want to give a quick answer, and then I believe what you just alluded to is that's probably going to be a whole topic of discussion.
It'll have to be, yep.
But real quick, how are you finding private lenders in this market? And then I've got a couple master lease questions for you.
The way you find private lenders in this market is the way you find private lenders in every market. You talk to everybody. There is more money right now sitting on the sidelines and sitting that wants to get into some alternative investment than almost any time in history. It is so easy to find private money right now if you start jabbering and start talking. Open your mouth and let people know that you have an opportunity to put their capital to work in a way that they otherwise don't know. They don't know how to find a real estate deal at a discount. They don't know how to secure their money against the property. They don't know how to make sure that the insurance is set up correctly. They don't know any of these things. And and you do, and you are learning, and you are taking those steps to create the opportunity. So it's talking to everybody and letting them know that there's an opportunity. I'll also say this related to that question really quick. Everybody thinks that with private money that because hard money lenders typically charge maybe 3 points and 10 or 12 or 15% interest. Everybody thinks that hard money lenders are the same as private money lenders, and that you need to pay high interest rates to your private money lenders. Guess where the hard money lenders are getting all of the money they lend out? From private money lenders. So the reason they charge 10 or 12 or 15% is because they're paying their private lenders 4, 6, 8%. And they're creating a spread on the money. Okay. And so private money you can get at reasonable interest rates with no fees, no costs, no qualifying, because you're creating an opportunity for somebody to invest that they otherwise would not have, or participate with you in the investment that you otherwise would not have. And so the other piece of that is from a private lender's perspective, somebody that has made a little bit of money, has some capital aside. It's either in a retirement account, and you can invest your retirement account in real estate. People don't know that. They maybe got some money sitting in the bank. Maybe it's under the mattress and they're going to do something with it. Here's the interesting thing. The psychology, when you have a little bit of money, society and financial planners have taught you to be okay with low rates of return. And they've taught you that the higher the rate of return, the greater the risk. That's hogwash. It's not true, but it's what we've all been told by the financial industry, right? The higher the return, the greater the risk. And so most real estate investors trip over themselves and screw up the idea of getting private money by offering too high of an interest rate. If you offer 10, 11, 12, 15% interest on your deal, people step back and say, what's the catch? Because they don't believe that you can pay that. Well, if you buy right at a discount, you can afford to pay that, but people don't believe it. And so don't shoot yourself in the foot by offering too high of a rate and make it unbelievable. I do a lot of private money today at that 6 to 7% rate. And that's a fair rate, secured by real estate, cash flow every single month. Like, it works great for me, and it works fantastic for my private lenders. Effectively, what that works out to be is that the cash flow on the real estate that I buy using private money, we roughly split the net cash flow 50-50. We both probably take about $300 a month cash flow out of that deal at the end of the day. And so does that answer the question a little bit?
Yeah, in addition to that, from Henry, in the case of private money, and I think this is a setup question, is the goal to be renting and leasing the property and then giving the private money owner a cut of that rent? And then he says, what if you do a fix and flip? Do you negotiate how much they get back and you pocket the rest? So can you speak to a couple of different ways, like debt or equity, when it comes to how you work with a private lender?
Yep. So I do everything with a private lender as debt. So I just borrow their money. Their money gets secured at closing. They never send me the money. They send the money to the title company, and they send the money to the title company with a letter that says, this money's coming in. I want you to do this with it. Okay. I want you to secure it against this piece of real estate, and then the overage for construction and overages send to me, the borrower. So some of their money goes to pay the seller. Some of their money then comes to me. So if you've got the money as the private lender, that money goes in and then goes to pay the seller at closing, always goes to the title company. And then the balance for construction and everything comes to me. That's why it's relationship based. Does that make sense? So yeah, if it's a short-term fix and flip, it's structured the exact same way. Now you have to go perform and then pay back that private lender. And you can structure that where you pay them monthly, a certain rate. You can structure that where you pay them a percentage of the profits at closing. You could structure that where you pay them a certain rate that accrues, and they get paid out at closing. So you can always manage your cash flow. When you don't have cash flow, you can manage your cash flow by negotiating terms with private money. That's why it's so powerful. You can't do that with a bank, and you often can't do that. Sometimes you can with a hard money lender, but generally private money, relationship based, gives you total flexibility. Now, and then I borrow most of my long-term stuff that for cash flow, I borrow it on a 30-year term. But here's what I do. I give people a 6-month call period. So yes, I've got their money borrowed on a 30-year term. But if they want their money out, they just have to let me have 6 months of notice. How many people do you think have ever, and I make them commit to a year, and after a year, I give them a 6-month call period so they can get their money back out in 6 months. How many people, after getting a year of consistent cash flow on their money, has ever called their note? Zero. I've never had a private lender call their note, because people get, just like me, I get addicted to cash flow, right? I don't want to sell my rentals because I like the cash flow. Private lenders get addicted to having their money lent against real estate because they like the cash flow. And that's a very powerful thing. Mike, what else we got?
Yeah, a couple master lease questions from Steve on our team. He's just remote. For master lease, what incentivizes the owner to agree to a master lease since they're going to be making less cash flow?
Yeah, it's a great question. The thing that incentivizes owners for a master lease is they don't want the headache anymore. They don't want the hassle. They don't want to deal with the tenants. They don't want to deal with the property manager if there's one in place. They don't want to deal with all of the things that a landlord sometimes has to deal with. But oftentimes they deal with it because they haven't put good systems in place. Being a landlord doesn't have to be complicated, right? When I first got into this business 20 some years ago, in my first 18 months, I bought 30, almost 40 houses. And I was not a good landlord. I didn't build this. I was really good at buying. I was really good at finding deals, and I was a really bad operator. And so I had to learn how to be a better operator. And once I learned how to be a better operator, okay, now real estate makes a lot more sense. And I typically find a good property manager, and I manage the manager. But back to the question, why would somebody master lease because they're going to make less money? When you get to that certain point, remember what they keep. They keep all of the tax benefits because they still own the real estate. They keep all of the tax benefits as an investor. So their incentive is oftentimes to get out of the hassle. They want lifestyle, and they have, for some reason, gotten sucked into this building, this facility, this rental portfolio, this whatever is no longer providing them the lifestyle. Maybe it's age driven, maybe it's illness driven, maybe it's divorce driven, maybe it's distress or tenant driven, maybe it's distance. They've moved across the country for a new job or an opportunity or to be with grandkids, and they no longer want to have the management requirements.
Another one on master lease from Micah Cord. Can you master lease if all the units are already leased?
Absolutely. In fact, that's a fantastic time to do it, right? You might be able to negotiate better terms if it's, say, 60% occupied or there's a bunch of vacancy, but now you're increasing your work to get that thing performing. But it gives you the negotiating power to say, hey, if it's partially vacant, you can negotiate step ups on your master lease based on occupancy, right? Anything that you perceive as a concern or a problem, like, hey, 40% of the building is not leased. Now, number one, you want to ask why. But then if you can answer the why, and oftentimes it's the owner's just not doing the work, and you can see how to do the work, you can step in and say, hey, I love the opportunity here. I want to do something, but here's how we got to structure the deal. I can't pay as if it's fully leased when it's 60% leased. So here's how we're going to build a step up. You can negotiate any term you want. Okay. If it's 100% leased, understand the motivation behind why the seller would consider selling or leasing. What are they looking for? They're looking to get out of the hassle. They're looking to move across the country. They're looking to do something different than what they have right now. Guys, I just quick before you ask the next question.
Yep.
I've done that a lot of times, and it will surprise you how good. Let me say it this way too. I've been on the selling side, like, because I know how to do creative real estate. I know how to do all of these deals. If I've ever gotten into a deal, and I have, where I'm like, I wish I wasn't in this deal anymore. It's not serving me for what I want, because I know how to get out. I know exit strategy. I'll go find that investor that I'll make them fantastic terms. I'll make this a no-brainer to buy my time back and get out of the operations. You want to be the guy or gal that's on the receiving end of my motivation or the seller's motivation.
So this one, you just mentioned creative financing. So Tony Zamberlin chimed in. How do you get a property under contract creatively and wholesale at what paperwork? So I know it could be a lot of different pieces of paperwork, but a quick overview of that.
Yeah. So there's a lot of things you can do. I mean, any contract that you go under contract with that you make assignable, and just for those of you that may not know the term, an assignment is your ability to take a contract and sell the contract. It's contract law. It's not real estate law. And so if I have a contract, buyer, seller, and our contract says that I can assign the contract, this contract is assignable, I can sell that contract to somebody else for a fee. Doesn't matter what the contract is, right? Any contract you go under, like, I could offer you $25 for your mountain bike, right? And if you sold it to me, I could probably go and sell that contract to a mountain biker right now for, $1,500. And I'm still giving them a fantastic deal, right? By the way, you want to sell your mountain bike for $25? So the point of it is, get it under contract. Like, whatever the terms you're getting under contract, if you make that contract assignable, you can sell the contract. Now, there are laws by state that restrict how you do this. And so this is not a blanket. You've got to understand the laws in your local state. I'm not an attorney telling you anything. So you got to understand the law in your state, but that's how it works.
This one comes in from Rising Time Investments. First of all, happy Friday, Rob. So that's good.
Happy Friday.
The rest of us were ignored, but we'll let that one slide. Just kidding. Are you paying retail for properties as long as they cash flow?
Am I paying retail for properties? No, I'm an investor. Heck no.
That's why I'm bringing that one up.
Yeah.
Because I knew you'd give a really a hard answer.
Yeah, no, I'm an investor. I buy at a discount. Now, that said, if I'm paying cash, I buy at a discount. If I'm buying on terms, I don't care what the price is. Okay. So
explain that. Somebody says, okay, so we're talking, and I'm being a smart aleck, and I've got a property worth $100,000, and I say, give me $1 million for it. It's yours.
Yep.
Explain what
I'll give you.
Everything.
Sure, I'll give you $1 million, and it's going to be your price and my terms. I'll give you, $1 a month for the next whatever it is, million years. Right. Yeah.
But
right.
So more realistically, if you could rent the property for $900 a month,
yep,
and you wanted to give me a semi-realistic answer back, you would go, sure, I'll pay you $400 a month until your million's paid off.
Yep.
And then now you have monthly debt of 400 and you go rent for 9.
That's right.
So it's that
I got a
age old
$500 cash flow.
right. Because sometimes we're talking to sellers and they're being smart Alex, and they're like, yeah, give me $1 million. And you're like, okay.
Yep.
Terms cures everything.
Yep.
And that's
Yep.
kind of the stock example.
That's right. Price cures everything, or terms cures everything. So we're either going to do my price in your terms, or your price in my terms. We're going to just balance one of those. And so I will pay retail if I get my terms. And I've done that hundreds of times, and it works really good. In fact, that's how I just bought my hangar for my airplane. We're in a market that is, a 3 to 5 year waiting period to get into a hangar up in the North Metro Denver area. It's super competitive. There's no inventory. Everybody thinks their hangar's worth $1 million, yada, 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 yada. And I'm like, I got a plane sitting out on the ramp, and this is not how this is going to go. And so I went and I went old school, because buying a hangar, so understand this, buying a hangar, there's not real property records that I could just go buy and get all the hangar owners and send them direct mail. I had to go print out a flyer, we'll pay cash or lease your hangar today. And I sent out all those flyers, and I got a few phone calls. I called 5 network as well. I called 5 of my pilot buddies. I get a call from one of them 3 days later. Got the flyers out there. I got my network out there. I get a call. And what do you think I ended up with? An out-of-state absentee landlord that had moved his plane to Washington, that had rented his hangar out and now had a deadbeat tenant. Oh, I've only done that 1,000 times, right? So I solved his problem. I gave him exactly what he wanted, and I got exactly what I wanted. I gave him his price and my terms, and he loved it. And it took me 14 days to move my airplane into a hangar instead of 3 to 5 years.
Love it. Hey, so 2 questions here are really asking the same thing. So one of them is a second question from Rising Time Investments, and the other one is from West Coast Crypto. And West Coast Crypto says investing in California has become insane, and I think competitive could be swapped out for the word insane. Any views or recommendations? Rising Time Investments said, how are you changing your marketing strategy in the competitive state? So my thought was, can you build into this answer the reason you went to Memphis?
Yeah, so I've invested in multiple markets all around the country, depending on what the market cycle is, right? So the real estate market typically goes on an up and down swing, but every market is local. Every market's different. That said, every market falls into what I think of as 2 buckets. It's a boom or bust market, or it's a cash flow market. Denver, for example, is a boom or bust market. It goes up, hits a peak, and then crashes. And then it's at the bottom, it hits a peak, and then it crashes. Whereas I moved in the last cycle, I moved capital and started to buy in cash flow markets that historically are a very small little rise and fall in appreciation. So you give up some appreciation to maximize your cash flow. Guys, cash flow is what creates lifestyle, right? So all of the guys and gals that are, buying into booms and busts and trying to make the big fat profits, well, what are they hoping to do? They're hoping to ultimately then take those profits and put them into something that pays them passive residual income over time so that they buy their life back, right? Well, why not just go straight to buying your life from day one? So if you're in a high-priced boom or bust market, get into a low-priced, historically stable cash flow market. There's more inventory available. You can buy a deal today versus waiting and hoping your marketing produces something in the next 3 to 6 months. You can cash flow it right out of the gates. Private money works fantastic. Control or master lease works fantastic. And especially with where the market is today, at the highest it's ever been, get into a cash flow market that even if it crashes, it might go down 10 or 15%, but the cash flow is going to remain. That's what I tell people to do.
Hey, will you quick tell the story? because just about everywhere is competitive today, especially if you're going to compare it to 5 or 6 years ago.
Yep.
So explain the story, because I think we've all heard it. I know I've heard it. But when you picked Memphis, you said, hey, let's try and find the most competitive market we can.
Yep.
And let's go prove a point about consistency of effort. And let's go make it happen.
Yeah, so a number of years ago, we were franchising the business, and I wanted to prove a point that even back then, a few years ago, it was competitive. And at the upward side of a cycle, it gets more and more competitive. It just keeps getting more and more competitive. And so I said, in order to prove our model beyond the 17, 18 years of that I had already been doing it, let's take our franchise model and let's launch it into a new market. And so at the time, one of the most competitive cash flow markets in the country was Memphis. There was a lot of people buying investment real estate in Memphis. There were a lot of operators. There were a lot of turnkey providers. There was a lot of competition. And I said, I want to go into Memphis and I want to launch our marketing in Memphis. And I want to start buying real estate deals in Memphis to prove a point that I don't care what market you go into. If you're consistent with your marketing, if you use tools, if there's follow-up that's in place and or automated, you can go close deals fast. And so in our first month launching into Memphis, we bought 23 houses. Okay, this was a couple of years ago. And we flipped a lot of them. We held some of them. And we did it to prove a point. And so if you're stuck in a boom bust, high priced, expensive market that doesn't cash flow, don't beat your head against the wall. Go somewhere else. I mean, what's a $300 plane ticket to go jump and meet your property manager if you have to? Like, it's no big deal. Like, just make that effort, because the reward is worth the effort.
We should do a whole training on how to live in one place and manage a deal or a portfolio in another place.
Totally.
So we'll kind of make a note of that. Yeah, I want to. I've got another master lease question, but before that, Rising Times Investment said, thanks so much, finding a ton of value in Livestream chat. And then Jeff Hall says, I wish I'd arrived earlier, so I just want to share these, Rob. Rob is sharing some really good information. Thank you for this TGIF live stream, so that's good. Rodney W., what objections typically come up from sellers when presented with a master lease / lease option?
It's typically trust questions, or I've never thought of this. How does this work? Is this legal? And so let me tell you how I handle any negotiation type of objection or conversation. I'll take the elephant in the room and I'll bring it to the forefront right up front. And I'll say, hey, so let me ask you a question. Mike, you own this 12 unit apartment building. I understand you're kind of thinking about selling it, and but you like the cash flow, right? Those are the exact words out of the guy that sold me the hangar. I love the cash flow. I just can't deal with the operation anymore. And I don't want to take the tax hit when I sell it and all these other reasons, right? So I say, well, I tell you what, if I can get close to your asking price and we can keep you cash flow going, is that something you'd entertain? And he's going to say, well, yeah, I probably would. Well, here's what I'd like to do. And then you can propose that type of a structure. And the objection that I'll say is, and you've probably never even thought about this type of a structure before, am I right, Mike? And Mike's going to say, yeah, I've never, is this even legal? And I was going to say, that's exactly what I wanted to talk about. Is this even legal? Why does this work? Let me tell you why it works. And then you explain, you take the elephant in the room up front, the most scary thing that the seller's probably thinking. You got to get good at getting in the head of the seller and understanding what are they afraid of to do this deal, and what do they want to do this deal. And oftentimes sellers on these type of scenarios, they don't want to pay taxes, they don't want to pay real estate agents, they like the cash flow, and yet they don't want the operational headaches anymore. They're at that age or whatever, and they want to move on. Those are perfect scenarios, and you can pay top dollar. You can negotiate cash flow. Hey, if Mike, just so we're on the same page, if I get close to your asking price, there's going to be a little bit of discussion we have to have on the cash flow. And obviously, if myself and my team take over all of the day-to-day management and operations, you might end up with a little bit less cash flow out of this than you're accustomed to today, but you get all of your life and lifestyle. Does that work for you? Right? And does that work for you is how I ask that question almost all the time. And they're like, yeah, let's have that conversation. Sometimes they say, no, that doesn't work for me. I want you to pay me full rent and full price. Well, okay, then I don't need to waste my time because I'm an investor and I need a discount on either price or terms. What else we got, Mike?
Good stuff. So Christian said, so how do I manage a property far from me? I think as we're going to go for an hour here today. I think as we're kind of in the final 10 minutes here, I think that just needs to be a whole topic.
How to manage.
I have a lot of questions on that.
Yep.
How can I possibly buy a property I've never seen? How can I manage a property I've never seen? And how can I manage a property that I have to get on an airplane to go see?
Yeah, I'll give the short 30-second answer, maybe minute and a half answer. And that is going to be find a property manager that's going to handle the management for you. Okay. I still to this day, I could and I've done it both ways. I could manage it internally myself and build a team around doing that. And I've done that a lot. Or I could find a good management company that I can build a relationship with and have them manage for me. So now I manage the manager. I give up a little bit of margin, a little bit of cash flow, but just like the seller wants life, I want life, right? And so I'll buy my time with a little bit of margin in my cash flow to find a good property manager. And I have a fantastic checklist because I bought real estate deals in, 20 different states, 30 different cities across the country. And so we've created checklists over the years of what are we looking for in a good property manager? So not on this one, but on one of our live stream trainings coming up, we'll give a link where people can go download some of these resources and get our property manager virtual checklist. So we'll solve that.
Here's what I think too, just to add to that. If you live in Denver and own a property in Denver and a pipe breaks, a good property manager is going to go handle it. So if you live in Denver and own a property in Memphis, same scenario. But
That's right.
That checklist will be killer.
That's right. We're investors. We're not rehab people. We're not swinging hammers, right? If you're doing this thinking you got to swing a hammer, you got the complete wrong mindset. Okay, there's two things that I can't do. I can't fix up houses and I can't read software code. So I'm a real estate investor and I own a software company, right? Good call, right? Well, I know the things that I do really well, and I build an amazing team around me that does their thing really well, and we all benefit. And so don't think of yourself as the contractor, the manager, the fixer-upper, the toilet, unclogger, the ant killer, all of those things. You're the investor.
From Rising Time, wow, loving this. Are you guys doing another live stream next Friday? So we might as well just say yes.
Yep. We are. We're gonna do these. If not only the team here locally, which is and our remote team that's chiming in, as long as you guys are getting value out of this, we'll keep doing these. And like we said, we decided to just open this up public because we want people to succeed.
I think this one's gonna maybe go to our end of our time today, but 3 or 4 people now have asked about text messaging. So I'm gonna refer to Jay Knight's question. What are your plans to navigate the move away from SMS marketing campaigns? And I know it's on people's minds.
Yeah.
Right?
Yeah.
Hot topic. And
yeah.
So as we kind of, wrap today, I'll see if our internal team has anything else, but
yep.
He worded it really good. What are your plans?
Yeah. So here's the cool thing with Freedom Soft and the changes in it's A to P, application to people, 10 DLC, 10-digit long codes, the Traced Act, and TCPA. So 2 laws, and then kind of how they are defining what is applicable under these laws, where text messaging is kind of going by the wayside. We as a platform, as a software platform, have had and continue to have fantastic text messaging systems, deliverability, communication opportunities built right into our platform. So FreedomSoft is a lead generation CRM built around a phone system. So you're not importing, exporting, losing phone calls over here. It's all built in and auto syncs right with your lead record. What are we going to do to navigate the change? Well, the cool thing is FreedomSoft is a fully robust, already operational application software tool that already has all sorts of other lead generation opportunities built into it. We already have direct mail. We already have cold calling. We already have lead finder and other tools. We already have so many other tools built in that we're going to make a shift away from, or we're encouraging our users to make a shift away from SMS front-end lead generation and move to some of these other things: cold calling, direct mail, online lead generation. And we've got some trainings and some things coming up for our users to show them how to navigate away from this thing that has been cheap leads fast for the last 2.5 years in real estate. But guys, I can tell you, I can go back 20 years, and I was doing this business back when you had to call the Denver Post and spend $319 for a weekend to put your "We Buy Houses" ad in the classified sections, right, for Friday, Saturday, and Sunday. And that's because Craigslist didn't exist. Then all of a sudden Craigslist came around and we're like, whoa, this is cheap, fast leads because I don't have to spend it, put it in the Denver Post anymore. And so this flash in the pan of text message lead generation is getting regulated out for two reasons. The risk is rising significantly with the Traced Act adoption in 2021 because the fines are increasing, which is making frivolous litigation a rising thing big time, and the government is pouring millions of dollars into enforcement. And so while we're a fully, we believe, compliant application, using text messaging on the front end lead generation just creates significant risk. So we're starting to show our users how to use all of these other tools inside of our existing system to win, and you don't have to be afraid of that change at all. The one constant in business and the one constant as a real estate investor that I've learned over the last 20 years, that one constant is constant change. Here we go.
Hey, as is going to be the case every week, we're going to keep these to an hour. We have some questions in here that we're not going to be able to get to. So I just want to tell people, send them into support@freedomsoft.com, and I'll be happy to, myself or the team will be happy to get an answer back to you. So we're just not going to be able to cover all of it. So I just want to throw that out there.
Yep.
I had somebody chime in. Are you going to answer my questions? I'm going to do my best to try and keep us as close to the topic at hand. And so not ignoring them, send them into support@freedomsoft, and happy to get an answer too. Cool. So. Awesome. Well, hey guys, I hope you enjoyed this. If you did enjoy this, can you guys let us know? I can tell my team enjoyed it here, but I want to know that we should keep these public. If you guys enjoyed it and want to continue jumping in, let us know, and we'll continue to do these. So, hey, thanks for jumping on. We appreciate it, and we'll see you guys on the next one. Cheers.